So I want to welcome everybody to our meeting. So that was a little unnerve wracking. I've never had that experience that like that very often. So Patrick, thank you for being patient and getting on. I want to welcome everybody to the webinar. My name is Mark Mopp and I'm your host tonight. And or I should say Patrick and I are. So our guest speaker is Patrick Muntz. We're going to be talking about where's the best place to get your real estate business funded and to get your mortgages and all your deals put together. So, and we couldn't ask for a better guy. There's a couple of disclaimers I want to give, just so nobody wants to sue Patrick or myself. And that is that real estate by its very nature is risky. Sometimes you win, sometimes you lose, or you even break even. We can't guarantee a profit or loss in the real estate business. We do not provide legal or accounting or contracting advice. Said another way, everything we say is not to be taken as tax or legal advice in any way, shape, or form. So basically, don't sue us. So this is our agenda for tonight. Now, first thing I wanted to do is talk about Patrick. I've known Patrick for plus 35 years, and he is, in my opinion, one of the most knowledgeable people when it comes to loans and lending and funding for businesses. You know, he boggles my mind. Sometimes I got to make him break things down and to dummy it down so I clearly understand. So I can tell you this because at one point we shared an office together, but when lending companies and mortgage companies can't get a loan done, they'll send it to Patrick and they'll send it to him. He'll evaluate it and he'll get the deal done for him. And so he gets repeat business from other lenders. So he's a great guy. Thanks for being on with us, Patrick.
Thanks for having me.
Yeah.
Looking forward
to it. We want to spend about 10 minutes. I was hoping to get feedback, but since we're starting late, we're probably not going to do that. I was wanting to kind of know what kind of questions you have and what you want, but if you can put them into the chat, that would be great. So just type any questions you've got during the presentation into the chat. I'm going to keep everybody muted for the about first 15 or 20 minutes because I want to get with Patrick to where he can actually give you like what's the best source for funding at the best rates for your real estate business right now. And I understand that everybody's situation on this call is different. So some of the things Patrick's going to talk about, you might not qualify, but what I want you to know is that he's got unbelievable programs for everybody. So just because he's covering a program that doesn't apply to you, when we get through this presentation, then you need to bring that up. And I'll tell you another reason everybody wants to listen to this. So if, in my opinion, the worst case scenario, if somebody's got an active business and they've been filing their tax returns, even if you're a contractor and you're a one party owner of a business, you can get minimally up to $20,000 on the program that Patrick's going to be talking about and get it forgiven at the same time. So you need to listen all the way through because he's going to be going over that final piece at the end of this little 15-minute presentation. So I'm probably not saying that quite right, Patrick, but I'm just going to let you take it over. I want to welcome you, and we're all ears.
Oh, well, thanks. I think it's important to note that this is probably a once-in-a-lifetime opportunity in terms of a convergence of pandemic rescue funds that are united in the fact that they can provide you with working capital that is rocket fuel for anyone who qualifies for this, that will carry you for quite a while. Includes new programs that are coming out that dovetail right into the end of this once this expires, and it's a fairly short-term program. There's only 20 more days left of this program as far as the Paycheck Protection Program, the PPP. We've all heard of this program, but what we haven't heard is how it works. What are the guts? What are the innards? How does this happen? And how can it help us? How can we all benefit from this?
There's
So-
a lot of misunderstanding on the program. A lot of people think it's just 100% payroll protection, but payroll. I don't know what's PPC stands for. What exactly?
Paycheck program protection program.
So they think that it's only going to apply to payroll, and that's not true at all. So
Yeah, there's a lot of meat on the table here. And I think that the most important thing is we sort of talked about this a little bit just between us, Mark and I. And I said to be an investor, one must invest. To be a person who gets loans or typically has business opportunities, one must take advantage of the fact that the system is geared for people in business who have a need for more and more working capital to expand. We call that growth funds in other entities. The documentation that's coming.
whoops, hang on.
Sure.
I just wanted to.
Yeah.
Sorry.
Go right ahead. You can go back to that page, the previous page we were talking about. Yeah, the nature of the program is such that one wants to connect with a number of opportunities. My point is that you want to have a business, a registered business entity. And the reason you want one is trifold. The number one reason is you can get lending on that because people don't want to get entangled with consumer loans because there's too many protections for consumers. And there's so much red tape and so many issues that regard that it's very difficult to be a flipper and get fix and flip or wholesale funds or anything that you need through any sort of residential programs, because those are for owner occupieds. They're not tied to anything else. And the lending community has turned their back on anything but businesses. So that's crucial to note. The second value, obviously, would be that you, as of the 2020 Tax Act, are looking at cutting your taxes in half. This is unprecedented, unbelievable. So not only are you moving from 38% taxation exposure, you're down to 20. We need to get a LLC. We need to get a corp. We need to get an S corp. You need to be protected one way or the other.
So like if I'm a if I have a limited liability company and or even if I'm a sole proprietor with or one person LLC, this would apply to be able to do the payroll.
Oh, absolutely. Yeah. We're going to go into that a little later into the discussion. The most important thing is that what people want to understand is what are the mechanics associated with the PPP, because so many people can qualify for it that have a business entity of any kind. I would guess that the majority of people have some form of an LLC or other variations on that just to operate in a world of real estate, just for limited liability, if nothing else, let alone the tax advantages, and the control of the access to funding. So I think that kind of sums up the need for this. So it's desperately important for everyone to get engaged in this.
So, so based upon your documentation here, I need to get 2 years tax returns, 2019 and the 2020. Is that correct?
Yeah, we need 2 years tax returns minimum, 2019 and 2020. What we're looking for are the income statements and balance sheets.
Okay.
And the income statement is really a P&L balance, a P&L, a profit and loss.
So my personal credit isn't of interest in it, something like this.
There's a caveat there, and we can move to the slide that represents that. I think what you'll find is that the issue isn't your credit for the PPP program. While conversely, for SBA and unsecured loans and other opportunities that you'll have to move within the landscape, you will find your pricing reflects what the credit score is. The better your credit, the better the rate, the lower the cost.
So from looking at this, it's if in 2019, I need to, and then I'm looking at the 2020, one of the quarters I had needs to be 25% of below what I did in 2019.
Yeah, what they're looking for is two things. One is the loss of personnel, and then the percentage of revenue loss as well. So they want the employee wages, wage losses integrated in with the quarterly period losses of revenue from the business. And they will look, that total will be the 25% or more revenue dip for 2020 at any point in time, and they're weighing it out between each quarterly period.
So I know that there's some people like they're looking at this and they're saying, I'm not going to qualify for this particular loan. So after we get through this few minutes that we're going through this, is there a lot of programs available right now that you can talk about? And I know next week you plan on covering a lot of that in depth, but I know that right now the interest rates are down there. So like if I wanted to fund a business and I don't meet these qualifications, are there programs available to me?
Oh yes, there's no loss of programs for people, and I'll give you a particular suggestion that may be possible interest is this. Just had it a second. Is $400,000. Now this is for businesses that are unsecured, and then I'll go into the other programs. 400,000, no minimum credit score. Let me repeat that. No minimum credit score, up to $400,000. And these are revolving lines of credit, and they'll give you up to 4 times what your monthly revenue is.
That's good.
That's one, just one. Okay. And then of course, there's a number of other programs that are unsecured that are, first of all, does everybody know what unsecured means when they say unsecured? Unsecured means the loan doesn't require to be paid back with the assets pledged from the company.
Got it.
And then what they do is the unsecured loan does require a personal guarantee, and it does generally require higher interest rates and fees. And there's a number of versions of those loans. And some are based on how much generation you do retail, that are, based on how much credit card or merchant advances you get as credit cards.
Got it.
Pat, we have a question from Christina. She asked, is the 25% of the for the LLC or personal income?
Well, it's anything that runs through your business as an LLC should be run through your business. I'm not trying to tell you what to do, but
it would be
for the LLC.
Yeah.
The LLC is the vehicle that you need to submit for the PPP. Personal income, referring to dividends, is all in your return, but it's integrated typically in a personal return. So they're looking at business and personal taxes. Those are 2 separate filings.
So I've got a lot of friends, because I do a lot of business with people from India that might be in the U.S. that are on that are not a U.S. citizen. So I know in the past, these loans all had to be, you had to be a U.S. citizen to get it. Is that true today?
No, what they've done is they removed the citizenship requirement from the first round at the end of the first round. And
Wow.
so now they've made some sweeping changes with a lot of stuff, and the updates are that we encourage everyone to apply that has the basic protections of the corporate entity or the LLC.
So I noticed that they, not everybody qualifies, but not only is this loan, it's 1% interest. Is that correct?
Yeah, it's tough to beat. And they were talking about rocket fuel. Let's get down to it. I mean, the rocket fuel is that we're dealing with 1% interest.
And if I need $50,000 for my business, and I've got that one quarter that was below 25%, and I need 1%, and I need 50,000, or what's the other opportunities besides that?
Well, like I said, are we going to advance into that, or do you want to discuss that right now?
I just wanted to throw it out there. I mean, I was so staggering earlier when you said that, because like 88% or something like that of those people end up getting forgiveness.
Yes, the forgiveness component is shocking, and the volume of it. There's over $110 billion that have been forgiven in the first round alone.
Wow.
That gives you any idea. What are the auditing capabilities on that? I don't care if you're the IRS, but there are issues, and it has to be attended properly. We can change the slide and let's kind of touch base on this. Essentially, this is like what we were just talking about, a quarterly revenue reporting comparison between 2019-20 on a quarterly basis. The two forgiveness components are 60% of the loan. It's got to be spent on your employees. And it has to be legit in terms of what you're doing and rehiring people or shooting them checks. The balance is for you to spend on allowable and acceptable to the PPP for anything you want that has to do with, improving your business or working capital. And that is the key. That is a huge volume of change to be in control of.
So for example, if I went in and got a loan for 50,000 and it's 1% and it's got the potential of being forgiven, and my payroll, so that'd be 30,000, 60% of 50 is 30. So $30,000 I need to put towards payroll in order to make that work. Is that correct?
Well, yeah, that's the theory, the theoretical side of it, and what you're able to do is why don't we change the slide here?
And if I was the owner, would I be able to apply that to my own salary?
Yes, yeah. In fact, if it's almost a given that your loan will be forgiven as an individual owner or a husband and wife team.
Wow, good.
I mean, a home run. I mean, people don't realize what this is. And when we say the average loan is $100,000, but you can do as low as 20, I think, something like that. But it's these are lenders that we work with that have high volume processing outlets in Denver that work for the SBC that process these loans. So the SBC is a guaranteeing organization that creates policy. It's like Fannie or Freddie. It's an agency. It's not examining your loans. They just set the rules and do the refinements in terms of laying out policy. And you'll find that the loans will not be seen as new or taxable income. So there's a number of benefits that come with this, including write-offs and all kinds of things. They're just, mind-boggling. And that's the value, is the whole package. But again, the issue is, as we explore this fairly quickly, you're going to find that the majority of people need to apply immediately because there is already 1 million people in process.
Wow. So you want to go to the next
Yeah,
slide?
let's move on. Yeah, so here's some of the tax deductions that are available to you. And like I said, consult your CPA or tax preparer for tax advice. Any business software, cloud storages, tech services. Well, let's think about this. How many things can you put under tech services alone?
Yeah.
I mean, it's a huge category.
Yeah.
And then there's a new tax deductibility for allowable medical expenses, especially for mom and pop shops. I mean, like I said, this is mind-boggling. Then you've got HR that's covered. You've got marketing, delivery systems, products and services, manufacturing, work in progress under those services, a number of things, especially inventory. There's a lot going on here, not to mention operating expenses. You're also looking at utilities. If you've got a manufacturing plant, you know what utilities are. Anything industrial, people know what that is. So what I'm saying is when you're looking at a 30,000 monthly bill, if you're a big middle management company or something, you'd get the picture real quick. So there's a lot of competition that's pending this, but right now this period is open to mom and pop, people with 20 employees or less.
And the deadline on being able to get this in?
March 31st.
That's
But
right.
I urge you to get it in and do not wait because people are trying to shut down processing already on this.
Yeah.
Let's change this and find a new slide. Okay. There's no credit score requirement. But keep in mind that this is right now. This is despite the fact that the program is under the SBA's program, which actually does have an acceptable credit requirement. So this is the way it is right now. Take this snapshot and run with it, everybody. Why is this the rocket fuel? I don't know how you can beat it. I don't know anyone who can tell me, have you ever received a 1% loan in your lifetime?
No.
Has anyone ever had that? I don't know anybody. And how about this? No 1% with no payments for 10 to 12 months.
Yeah. So if somebody wants to have you with this to take a look at it, so how would they go about doing that? Or is there more that we need to cover here?
I think we need
Probably
to
is,
cover a little bit more. Yeah, so the payroll numbers or net profit numbers are what you're looking at and how they apply on a quarterly basis when you're self-employed. And like I said, they allow you to hire your contractors as employees, but you may not have any money left by the time they're done, if you do that now. So it's more about compensation and balance and payouts, but 60% is got to go towards that, and that's the component for the forgiveness. The 60% that you're paying into with these funds to either rehire or to pay straight out to your employees are given. It's not up for discussion if you want forgiveness. But like again, now you got control of the balance of the 40%. How about the next slide? There you go. So what forgiveness, loan forgiveness app should sole proprietors and independent contractors or self-employed individuals with no employees complete. It's a 3708 is the name of the application, but we handle all this for you. And the people who have no employees at the time of this application that didn't include the employment salaries are automatically qualified for forgiveness.
Wow.
There's a lot of auto components to this, for again, this class of 20 employees or less. Shocking. But obviously there's larger classes out of the 20 employees too, that are still in the same mom and pop category that have built up their business over a lifetime.
So this is like a perfect setup for somebody, even if they've got a full-time job, but they've got a limited liability company and they've been taking some payroll out of that in the real estate, right? I mean,
Yeah, if they're sole proprietor or independent contractor, I mean, it's awkward because they're looking for people with a corporate entity, and the independent contractors are 1099, as are most, many sole proprietors. So the idea is to be dealing in W-2 wages for your employees. Because if your the employees are 1099, they're going to be rejected. You're not going to get any credit for those people because they're not. The PPP's interpretation is that they are independent contractors per the IRS definition, because you had no control over them. They're a separate entity. They're their own business person, their own business.
right.
Next slide. Yeah. So these are just some of the issues. The electronic signatures have to be in file, and if you don't have one, then you have to do a wet signature and send it in. So there has to be some kind of contact between the parties that goes beyond electronic signatures. And they'll accept scans and things of that nature. So it's completely digital. Next slide there, Mark.
Whoops, it's locked up on me.
Ay, caramba. It happens to me.
There we go.
There you go. Okay. So now the thing is that this is so interesting. There's this 1% money, 10%, 10 months before payment starts. You don't have to make any payments, and possible forgiveness. They even have components which are partial forgiveness if you don't quite qualify for the 60% threshold or haven't met it. So believe me, this is like shoveling the money out the door. What about partial forgiveness? Would you take it? Would you accept the possibility of total forgiveness? Yes, I'm sure you would. Now, if you keep in mind, the only way you have to pay back any part of this loan is one of two ways. You either don't take it and give the money back, or you use it for specific items as outlined throughout this presentation. 60% of these funds have to be spent on PPP payroll costs to maintain full loan forgiveness. Well, what could you do with a check for $20,000 for being alive? What could you do with a check, with a business? What could you do with $50,000, $100,000, $150,000? The value of the 150 figure is kind of interesting, and that's of note. You have control of the 40% without any documentation requirements whatsoever if you keep the loan at 150 or under.
Wow.
Yeah, so there's no accounting for it, is what I have to do. So if you're not forgiven, they put you at a 1% 5-year term. So this is the worst case scenario. On a 150 loan, you're looking at 2564.06 based on 60-month repayment, right?
Yeah.
So I guess the nature of it is it's dirt cheap money. I mean, I guess maybe I should wonder how many of us would take 1% money. Maybe